Good morning, everyone. Nice to see the attendance is still right up there. Clearly, the conversation is well worth the time and effort. I've got three people who some of them I've known for many, many years, and some of them I've only just met, but we've met over the last few weeks. And I think off the back of the earlier conversation with Geeta and her panel, and quite centralized around a lot of the domestic payments world, we're going to try and tackle some of the cross-border regional payments world. And I think just off the back of yesterday, it is so complex and so challenging to think about how we achieve what is so vital to our continent, our economies across the continent, and to do that in a way that is effective and really does promote what this country needs, or what this continent needs, and certainly the complexities of things like the geopolitical environment, the liquidity conversation we spoke about yesterday. I read in a document last night, we called liquidity hoarding, and I thought, gosh, but that's a certain factor, right, as to why that happens. Yeah. And in amongst all of that, we've got these payment systems across the region, and I think many of you will agree that if you are in cross-border payments and regional payments, it is largely quite fragmented. There's been a lot of activity in payments to facilitate innovation, probably in the tech side. But it's not just about the tech. I think Geeta said that earlier. It's not just about the tech. It's about political will. It's about the legality of it. It's about the complexity of different countries having different economies. And I think today what we're going to try and do is tackle some of that and really try and get to the depths of it. I don't want us to be sort of broad brushing it. I think we must tackle it. And I know that some of these people are quite passionate about the payments landscape across the continent as well. So on my left, I've got Vicky Ganesh. I've got Olivia Lenz, and I've got Miranda Perumal. Hopefully I got that right. I want to tell you some quick anecdotes about these three people. Vicky, here on my left, got married in 1993 when he was obviously of age. He told his father-in-law when he was only 14, he was going to marry that lady. She was only 12. And he's still married today, which is 25 years?
Wow.
Congratulations.
Thank you.
Olivier tells me he's a boxer.
Twice.
So my assessment of that is, in the payments world, boxing is probably a good thing to have, given the world in which we live and the diversity of which we live. And then we've got Miranda. If I get that wrong, you must give me a whack. Miranda is CEO of a fintech called Scale. But I think what is interesting is that in her early years, she was into, and probably still is into, fast cars. She organized things like drag racing, not in the streets, not illegal. It was on Kailami, if I'm not mistaken. But I think in the world of fast payments, if I draw that analogy, it's a great space to be in. She's in fintech. She's out there trying to achieve the goals we're trying to achieve: faster, safer, cheaper payments as well. All right, so what I want to do first of all is I want to just go through each one of you and just have a quick fire conversation about some of the payments topics that we want to cover. Then I'm going to ask the audience to please answer a question. Don't go up yet now, though. Let's just go through the quick fire questions first. And then we'll get into some depth. So Vicky, where's my rapid fire? What's the one thing fintechs get wrong about banks?
Sure. I think Lincoln probably spoke to that, the banks and the non-banks. I think we're all trying to solve the same problem. The economy, the customer, it's access to the payment system to move money. And I don't think we should be talking about us and them. And I think it is really about how do we co-create in this environment. But the language we use, and I would beg to support on this as well, that the conversation is wrong. Whenever there's a non, it says you are out. And I think we need to fix that. So I don't blame the fintechs. I think we've been standing in the way for a long time around things, the co-creation, the capacity, the capability that we can harness to drive the economy. I think it's there. It's how do we see that? So I don't think it's a fintech problem. I think it's an ecosystem conversation that we need to really straighten out.
Yeah, and I just personally agree with that in a way, because when we're listening to Lincoln, he alluded to that as well as a collective. Olivier,
Yes.
SWIFT is a payments network, or at least a messaging network. Is it still the backbone of Africa's payments cross-border future?
It's a good question. I think we need to be humble as SWIFT here. I think there's a lot of networks in Africa that probably even carry more volume than SWIFT. I think we play in the wholesale space, and that's our bread and butter. If I look at Africa, still growing at 10% on an annual basis, so still growing very, very strongly. And that's on a cross-border perspective, and that's on an RTGS perspective. We're still powering 25 RTGSs on the continent. So when it comes to wholesale, we clearly see that growing. So from that perspective, and connecting then Africa to the rest of the world, I think we are playing a vital role still today. If you look at the volumes, intra-Africa, 34% of all outgoing payments go into Africa, 32% goes into Europe. Okay. If you only look at sub-Saharan Africa, it's around 13 million payments that we transport on an annual basis. So from that perspective, I think we have a voice, but we are one of the networks. I think there's players like M-Pesa that on a retail perspective, and other players that have also a voice and have a role to play. But we have a voice.
Thank you. Okay, Miranda. The biggest myth about fintechs in Africa, what is that?
I think the first one is that we don't want to comply. We're happy to comply if it makes sense for our business and the space that we play in the context of a market or environment. And the second one is that we're not coming after the bank's business. We are coming after the bank's business.
Very honest.
Sure, that tees us up. And how? Okay, now I'm going to ask the team at the back to throw up the question, because I want the audience to also participate in the quick fire. And there's one question here I want to see. It'd be very interesting to see your thoughts on the question, which is the biggest pain point in regional payments, cross-border, or regional cross-border payments today. Is it 1, rail fragmentation? Is it 2, regulatory fragmentation? 3, correspondent banking inefficiencies? And 4, FX and liquidity constraints. I'm keen to see how this starts to unfold. I feel like I'm on Who Wants to Be a Millionaire, asking the audience.
Maybe you should have added all of the above.
All of the above.
All of the above.
And more.
And more.
Very interesting.
It's up there.
It's certainly, we've got rail fragmentation, regulatory fragmentation. What is interesting is FX and liquidity constraints are right down there at 6.
Interesting.
And that is certainly an unusual result, I would have thought.
So it seems like we're doing a good job in managing liquidity.
It seems it, yes.
Yeah.
All right, yeah, I think we can set it at that and say that, yes, it's fairly even, except the one that is the outlier is the FX. And
Which is also quite interesting, because correspondent banking inefficiencies is probably one of the biggest drivers of slow processing across the environments, and I'm surprised that it comes down.
But then, to be very honest,
Yeah.
Kiki, that's a consequence of the first two.
I would agree.
So I think the audience has it right. I also agree that liquidity constraints would be a consequence. So I would see that as a higher subject in a higher percentage.
Good.
But yeah, I think the audience
Good
doesn't have it
feel.
wrong, to my opinion.
I don't think there's a wrong answer, to be honest.
Yeah.
Okay, right, let's move on. We did speak about a little earlier, fintechs versus banks. Is it a collaboration or a collision? And we all know that, so banks come with very solid traditional views, and they are trying to be innovative. Fintechs scaling responsibly Is the trust factor something that you really take seriously in the world of fintech? And I think it's important that we just discuss this a little bit. So Vicky, are we in regional payments losing relevance as a banking fraternity? And I guess in my case, I'm talking as a bank as well.
Yeah, I'm going to try and stay on the fence here on this one, because I think the ideal opportunity is what does the customer want? And what's the most ideal way to serve for that, as opposed to we've got a traditional banking channel, we're using correspondent banking models, they bring a lot of trust into the process, but they're slow and lethargic, versus where do you want things to go? So I think this is a cooperation, a collaboration, I think is the right words here, but the stuff. And as opposed to, first of all, I think the agility that's required in the space right now, I don't think banks can bring it to the table necessarily. I think we can broadly spread stuff, but the space where clients are in terms of their own environment, to be able to get solutions that actually materialize and matter, that then results in payment flows. We can play a broader role in that payment flow, but I don't think we've got the capacity sometimes necessarily, or the sectoral understanding and knowledge, a deep sectoral, that where the fintechs with the pliability can do that. So I think it's really an orchestration of really key stakeholders in the chain of value that lifts from where it starts and terminates where it should end. And I think all pieces in between should align to that. So that's kind of where my thoughts are, and hence I'm saying I sit on a fence here, because I don't think it's one or the other, I think it's both.
Miranda, your thoughts, and I want to ask the question a little differently. Have you got it right? Are you getting it right? Mobile money, cash, complexities of distribution. Is it something that you think you can get right, or are you just digitizing the financial models and innovating for the rich?
Yeah, I'm very passionate about this topic. Like, I was listening to the panel before, and it was incredible insight and deep learning, right? But I think there's a couple of areas that you have to kind of hone in on and focus on. Yes, I think that non-traditional players, non-banks, and I say just based on the terminology comments earlier, because that is the easiest way to simplify it. I think in today's conversation, there's so many different verticals and segments of fintech, and we're redefining it every single day. There's a new buzzword that we're hopping on. The simplest way currently within a payments environment is if you're not a bank, you're a non-bank. And if you're a non-bank, there are several verticals in terms of where you sit and what you support. I think that the conversation around digital payments, bringing people online, supporting SMEs and merchants, there's a narrative that makes it sound like this is not happening. It is happening. Half of the African population has a bank account or a mobile money wallet. Mobile money wallets are driven through mobile devices. Whether they're a feature phone or a smartphone, it doesn't matter. It's still a mobile device. That's not physical cash. So a level of digital payments are happening. A level of financial inclusion is happening. A level of financial access is happening, but in silos. And it seems that all of these ecosystems are competing with each other domestically, and that competition domestically among that ecosystem is growing. And I would love to have the same discussion that was just before us at a pan-Africa and 54-country level. And where do we get there? So my comments earlier about fintechs coming after the bank's business, yes, we are, because the banks can't do it fast enough. The banks are too bureaucratic. The banks focus on banked customers who have money to transact. And I think a big area that we have to focus on, particularly in the country that we're sitting in right now, is we want to go and bridge the gap between informal and formal economies, but we're forgetting that an informal economy, average person in South Africa, is living off paraffin and can't buy bread tonight. So where are they getting the money to transact? In a market like Zambia, we're talking about how cash is king, and cash solves all problems, but the central bank just produced notes, 500, which means at a toll gate, when you're driving from one city to another or getting from one area into the main Lusaka city, you're sitting at a toll gate for 30 minutes because the person can't find change. Everyone's paying with a 500 note. It doesn't make sense. So I think in terms of the ecosystem overall, whether you're a consumer play, cash in, cash out, P2P payments, utilities like bill payments, whether you're a telco who does the same thing with now additional services leveraging on existing channels like MasterCard, Visa, EFTs, SWIFT, or you're a bank that focuses on deposits because that's how banks make money, largely, very generally speaking. The ecosystem has to work together because regulation doesn't allow for a fintech to operate, autonomously. Same with a telco. A telco has to put their money in a bank, which means there has to be some level of compliance and collaboration and cooperation between those two players within an ecosystem. And then you hear about all the national payment switches, regional payment switches. It's just consistently fragmenting and covering and packaging it as a regional solution to a big and very complex problem. Yeah. But right now we're waiting for the 26th of October to see if a 92-year-old president is going to run another term in Cameroon. Like, can you do something about the airport maybe? So I think that the question generally is asked and its intention is to be loaded. But the answer is very simple. There is a level of collaboration in markets. Is it working for the usage and the adoption and the uptake that is required for that to be successful? No, it's not yet. Because that collaboration is not as smooth as it should be, and it's not bolstered and supported by regulation, policy, and some support for entrepreneurship and new entrants in the market, that it is not easy to enter in multiple ways.
Mm. Sure.
You got that.
Talk about passion. Yeah, thank you. And I mean, there's just so many elements of what you've just contributed or mentioned that we live it in our everyday lives, not us, but certainly in our work. And so it's something that I think clearly is very passionate. And we probably need more of this, as you say, but at a collective across the continent. And it's got to be with will and intent, because sometimes it's more just the talk shop and the shopping itself. And I think your points are supremely valuable to hear. I do have one for you, Olivier, on the same topic as SWIFT. Given the conversation with Miranda and Vicky, which side of the fence are you as SWIFT? Are you more aligned with fintech, or are you more? And tell us a little bit about that, because I know there's a lot of activity there. Or are you more aligned to the banks?
It's a difficult one, but I first want to come back to your point, because I agree. Fragmentation, ultimately, the end consumer is going to pay the price for it. Okay, and what we'll see is, and we did a study at SWIFT, where we calculated fragmentation. If it continues to grow, we see an impact of 6% on GDP, which is 6 trillion. The one who's going to feel it the most is the global south, unfortunately. Okay, so this fragmentation that we have, if we don't solve for it, it's going to bite us harder going forward. So even from where I sit, 100% with you, we need to solve for that. To your question, where do we sit? Look, SWIFT is a cooperative. SWIFT is a cooperative that is owned by the banks. That is the reality. But it is a cooperative. Now, what we've seen over the last few years, and I've been with SWIFT for more than 10 years, is that it used to be initially only banks. That grew to having corporates in there, the big corporates, so we have over 2,500 corporate players in there. And what we've seen over the last 6 to 7 years is that, and we don't call them non-banks, we call them payment service providers, because ultimately, everybody who's in the payments sector is a payment service provider. We've seen the payment service providers growing in our being part of SWIFT, and we have over 1,000 payment service providers. Now, why is that? And it comes back to what you've been saying, Vicky, is that the reality is that there is a collaboration that is happening. And we have those payment service providers, non-banks, into our ecosystem is because the banks need them. The banks need them to provide some of the services. And we see that only growing. Now, when we go to, and it's to another point, when we go to the regulatory part of it, there is PSD1, there is PSD2 in Europe, where we've got open banking, where these payment service providers, and it's going to be similar here with PAM, are regulated in the same way, which allows it also from a SWIFT perspective to embrace them into the ecosystem. That's one thing. The other thing that we see is that those payment service providers are there initially for the banks, but actually, a lot of those fintech payment providers also need SWIFT to do what they do. A lot of those players need to, and it comes back to the liquidity, manage the liquidity. And how do they manage that liquidity? As much as being a fintech, very often when it's a global player or cross-border player, they use SWIFT to manage and move that liquidity. So from where we sit, of course, we are owned by the banks. But interesting enough, that ecosystem is fundamentally changing. And we are also embracing the fintech payment service provider ecosystem, because they start to be and are an integral part of the financial ecosystem.
I just want to say, with the term payment service provider, we have to be very careful when we call ourselves payment service providers, because the regulator will tell us to go get licensed.
Okay. Then you're a non-bank.
Thanks. I think what I wanted to come back to is, we look at SWIFT and SWIFT's role across the continent. We know that the geopolitical world tensions are there. How do you look at, so what are the alternatives? And is SWIFT thinking about the alternatives? You know, how do you avoid going G3 currency for your settlement of obligations? Is that a model SWIFT is looking at? And how would that work?
So geopolitics are what they are, and they are what they are for all of us. Okay, and it is not only impacting SWIFT, it is impacting banks that operate globally. And I think we are just a small part of the ecosystem, and I think people also very often wrongly understand what our role is and what our role isn't. So I think the first thing we have to do, and that we're doing, is making sure that everybody understands what we're doing. One of the misconceptions is that SWIFT is only carrying US dollar. Why are we carrying over 200 currencies? Okay, so one of the things we're doing is education. And there's a whole new department that has been created at SWIFT to do that education so that people understand what we're doing. The second thing is, as to the fragmentation discussion, is making people understand that if there is no glue in between, what the impact will be. And then it becomes a very different discussion, and people start to realize that you do need something that goes across. Third, the reality is what it is. And I start in a very humble way, and I will continue in a very humble way. It is very likely that another network might surface or not. But that's something that we'll need to live with. Now, it's not because SWIFT has been there for the last 40 years and is doing what it's doing, and it kind of looks simple. It isn't. Operating a global network requires a lot of knowledge, a lot of technology, a lot of resilience. So it is not easy to just put a global network there. That's the other thing. And maybe lastly, let's see how the world's going to evolve. Yeah? I was waiting yesterday for the end of Dr. Westhuizen.
Dr.
Westhuizen to come with the answer, and I was hoping that the answer was going to come there. Maybe really the last point is technology. Also, SWIFT is investing in the future of technology. Okay, how do we make it better? We just launched the news about the fact that we're going to create a ledger. How do we take correspondent banking to the next era? So also there we were trying to be at the forefront. So I hope that answers your question, but I don't have a crystal ball, unfortunately, at this moment.
So it's probably being able to respond and pivot quickly. Yeah. Agility in the market, in a world of uncertainty, that looking through the looking glass, things are upside down, and we just don't know what the next shift will be. Speaking about the current world now, and Vicky, I'm coming back to you, and we've seen now the audience's view on friction and where the friction points are. And if it's not innovation causing fragmentation because everyone's got the next best thing, right? And that therefore makes them the silver lining, and yet the more you put in, the more cost you create, the more the consumer has to pick up and pay for something that isn't even ubiquitous. Then you've got regulation, which sits in a world of why is it we can't get the harmonization go? Why is it we can't get efficiencies out of things like reciprocity of regulation from one country to another? And really achieving what is probably one of the biggest cost factors in regional and cross-border payments. But I want to hear from you, Vicky, on your thoughts on what are those friction points that really stand out for you. Probably one or two.
I mean, I've got about 20, but I'll try and keep it simple here. I think, first of all, I think you're quite right. I think the nuance of every country in terms of its own policy, provisioning, those are not lined up. Do they line up in terms of intent? Absolutely they do. Do they line up in terms of configuration? No, they don't. And I'll give you a typical example. I was talking, at my previous panel yesterday on liquidity and liquidity management. Central bankers had a fair number of questions for me, which I took and I gave some examples where if you're holding fund as a foreign entity, irrespective whether you're a bank or non-bank or other, what are you allowed for? In certain environments, you have to sell your currency at the end of the day. You can't hold it as a foreign currency, a foreign entity. So, then it comes down to designated payment systems and all the things that we do to accommodate for that. But the implication is that if you have to sell your currency, next day you have to buy it back, and it's an illiquid environment, your poor customer is waiting for you to do the business. So that fragmentation you talk about, the policy implications that talk about is critical. The African Union Commission, when it started out with regards to looking at Africa and breaking it up into the 8 economic zones that we see today, that is understood, its requirement was very simple. Folks, you've already got an economy that's working and running. You've got some big plays, you've got some small plays, but you have an economy. Go ahead and ensure that you're putting in the payment capabilities so that you can first of all drive that trade to a higher level. There's more predictability in cash flows. There's better trade enhancements. And then look towards bridging all of those into a Pan-African view. What did we do? We all looked down at our feet. What are we going to get out of this? We locked that into our process. And while we do that, when you're looking down at your feet, the world is moving on. So the world has moved on. The clientele, where they are now trading with and who they're trading with has changed. The dynamics have changed. We haven't kept up. Our policies, our regulations, our infrastructure, our rules of engagement have stayed static to a conversation we started in 2006. Now, I can tell you the world in 2025 is very different. And I think we are architects of our own demise. The 3 questions that came out yesterday's conversation with the futuristic speaker, they spoke about who is our customer, what does a customer value and want, and how do we reach them? I don't think we've answered those questions perfectly well to ourselves. We've been working with the constraints we've put on the table, and we're finding kind of mechanisms around stuff. Okay, so that's kind of where I think we are spending our time, as opposed to having these conversations that says, well, how do we transcend those concerns? Where are the capabilities going to come from? How do we harness those capabilities into a single value chain and put that to test? I believe there's space for everybody. Honestly, I do. I believe there's space for everyone to play and get economic value out of that play. But the way that we are today, which is hedging our pieces and putting up the barriers, that is not a recipe for success. We were left with one question as well yesterday, and I'll just put that on the table. While we are sorting our noise out, there's that individual who is not in the financial system. He's sitting at the crossroads of a trade route, and he's going, I think I can solve this.
Yeah.
And he's going to solve it. And we're going to get left behind, and we're going to complain about, gee, but it's our space. It ain't our space. It's our client's space. I want to leave it at that.
Thanks, Vicky. I mean, I know a lot of people will all agree with you, and what is probably the thing we don't get is real inertia around getting the solutions, because I think there are the solutions. It's just bringing them in a way that they are, to the point that Pradeep made earlier. Actually, it's not about the rails. The rails are the utility, right? It's what you do on the either side, and often we think it's the rails, and that is not where the innovation should be. It should be, and Miranda's looking like she wants to talk, so I'm going to let her talk. I had a question for you, which was also about what you think is the best way to reduce cross-border payment friction.
I mean, if I, again, just simplify my thought process, it would be to leverage what is available today and stop trying to reinvent the wheel through new innovation in the name of all of the buzzwords. Again, financial inclusion, digitization, modernization, all the otherzations, right? I think that from a scale perspective, what we've also looked at in terms of just our core business is, okay, all of the enabling parties that are required to issue an open loop card to any business that has a flow that needs to get captured digitally, it exists. Issuer processes exist, banks exist, ledgers, wallet providers exist, the open loop rails exist, MasterCard, Visa, UPI, etc. But when a fintech wants to issue a card, they must go talk to 4 different players, 4 different contracts, 4 different commercials, and it must still make unit economic sense for a customer. So what did we do? Consolidated that 4-party model, made it a 1-party model, it's a scale party model. And in doing that, we're trying to make it just simpler. And I think that the region needs to consider that approach in terms of, like, stop saturating the market, stop shoving new product down customers' throats and then expecting them to remain loyal and for businesses to retain their customers and generate recurring revenue, because we're all building for profit, right? We're building businesses, we're trying to stimulate the economy, we're trying to create jobs, we're trying to grow merchants, grow entrepreneurs, and we're trying to foster intra-Africa trade. Now, my view on this is the following, and just coming off of Vicky's comments about the AU and the PAPS, Regional Payment Settlement Solution. Great, I get it. We are trying to protect our sovereignty. We are trying to control Africa. We are trying to stop being a victim, and we are trying to reduce our reliance on foreign currencies. So what's the problem that we are solving? We're taking a domestic transaction, we're making it an Africa-wide transaction, we're creating a reliance and a dependence on various central banks to ensure that they are participating within the solution. But when I read it, I'm like, isn't that what SWIFT does? It's messages, right? So a customer will say, send money, I'm a merchant owner, send money, I'm in Nigeria, so send my Naira to my supplier in Uganda in shillings. Message goes from my customer to my rail, from the rail to the central bank to PAPS, PAPS to the recipient central bank in Uganda, to the rail in Uganda, and then ping, I've got my shillings from payments coming from Nigeria. Cool. Simple. It's a message, right? It's a technology processor in the middle of all of that. So why aren't we leveraging what exists? Now, that is solving for intra-Africa payments in the name of intra-Africa trade. Cool. So what happens when I'm a merchant owner and I'm buying from Shein and I'm buying from Temu and I'm buying from Alibaba, and my mega corridor between Kenya and my stock is China?
Yep.
Is PAPS going to solve China? If so, how, when, how long is it going to take? 3 years, 5 years for the adoption and participants of the ecosystem? Now, let me ask you another question. For that to take full flight, you're going to need to get all of the wallets on board and participating in this regional system, right? Now, nationally and domestically, in most cases, what we see, because it came up yesterday in the futuristic talk, which was really great, that, okay, let's give a digital ID and a financial instrument together. Are the banks going to support that? Because you're pulling money away from what they do as a core business. And then our mobile money player is going to support that because there's a store of value behind that. So is MTN, Airtel, M-Pesa, Orange, Move, all the local free money, Espresso, are they going to say, I'm game? You are taking away their revenue, you're taking away their market share, you're taking away what they do best because you're replacing it with something else. Why not leverage? And what does that do to consumer? A very practical example today is we're seeing an increase of, again, fintechs, telcos, retailers, you name it, starting to issue digital instruments on MasterCard rails or Visa rails. What's the role of a MasterCard, Visa, UPI? It's cross-border payments. What's the problem? The cost, because they're built for banks. Solve the problem, leverage the rail, and collaborate as an industry. That is what we're not doing enough of. But we're, as fintechs, and I'll be the first to say, we're caught in a spiral constantly. How do we quickly launch agentic AI to solve world hunger because I need funding? And where's that funding coming from? Not an African billionaire. It's coming from the US, it's coming from Europe. So I think you can't have the payments conversation and a regional payment network conversation in isolation of geopolitical, macroeconomic, microeconomic, the actual state of a person living in a country, and understanding how does the Gogo, mine particularly who lives in Durban in underserved underlying areas that has no electricity, no running water, we're making water hot outside on the fire and having a bath with a bucket. That's where I come from. How are they going to know to send money to me, and I've just recently moved to a different country, or vice versa, through PAPS? How are you making that channel available to them? They're still going to Checkers to send money to a money market between Joburg and Durban.
Yep.
I think, so,
Yeah, there's
a lot
a bit to unpack.
this, and it looks like Vicky wants to say something.
It's the reason why I asked to bring her onto the stage, because I think it's important for us to listen to this.
Yeah.
I think it's critical because, again, we've been looking at our feet for way too long. The world has moved on, the economies have moved on, the requirements have moved on, and we have not pivoted towards that. We've been kind of stuffy suited, jacket up and ties on and saying this is how it's done. We are not the owners of that process. We are not. And I think when we say we are custodians. And tomorrow a new custodian may come in and actually do better. I think Miranda's points around the reuse capabilities, I think they're all there. I think we've got pieces. And I think that's the frustration. I was going to ask you a question, Brad. Just a reminder that we sat on the stage together 4 years ago, not this stage. And we were asked the same question. What do you want to see in 2 years' time? And we said, we don't want to be on the stage talking about it. We're here 4 years later talking about it. And I think that's really, the frustration that I think you've seen coming through the process. It's not about SWIFT. It's not about correspondence. It's finding the most appropriate stages. Pradeep made the point, today in terms of the regulations, the risk management that Lincoln spoke to as well. I think those pieces are there. They stand in the way every now and again. We've got the mechanisms to go and challenge those. We did that for the CMA around juristic, non-juristic persons that we can credit quite easily, having given the right level of data. Yeah, we can do it. But are we forging ahead with this thing? Are we easing the constipation? I think really what's the problem here.
So,
yeah, but
I'm going to stop you there because I can see Olivier wants to have he's chomping at the bit. We're down to the last 5-6 minutes. I want to get to some audience questions.
So normally I'm the one who has to say all what you said on stage. So I agree. Look, for me, that there's optionality is a good thing. Okay, and we need to make sure there's optionality, but there should be interoperability.
Correct.
And for me, those are two important things. I do agree with you. Let's put our efforts where it makes sense. Okay, let's not burn the ocean, which we're trying to do in Africa, which is frustrating. To your point, it is actually frustrating. But we're always going to have optionality at different levels, at wholesale level, at retail level. But it needs to be interoperable, okay?
Sorry.
And how that is...
Define interoperability.
Interoperability is that actually systems need to be able to speak to each other seamlessly, which is not the case. And if you have multiple systems, which you will not avoid because there is competition, but actually how people speak to each other, which language they use, should not be a competitive element into it, because that competitive element is what the end consumer is going to pay. So let there be competition, but let it be a competition not on how we connect to each other. That should be seamless, okay? So I think from a SWIFT perspective, we talk about ISO, but maybe it's not ISO, maybe it's something else. But if I put my SWIFT hat, I don't put on my SWIFT hat, let's put it off, we should be able to speak the same language and let them compete. And let it be then, whether that's a PUBS, whether that's something else, the best will win the race, and it will be different for different people. So for me, really, that the difference between optionality, choice, and interoperability, those two are fundamental in the discussion.
I have to address something, sorry. So I agree.
You got 5 minutes.
I agree, sorry, Brad. I agree. However, I feel like it's a little bit, it's the wrong thought process to retrofit this blanket interoperability, seamless payment solution on every single segment of the market.
100%.
Sometimes a customer does not need to be interoperable for specific use cases and payments because they're simply not using it. But what will end up happening is because of this blanket interoperable sweep through the markets and Africa being looked at as a pure numbers game because we've got so many people, the cost or the impact is the cost on the customer to achieve that end state. Because with so many hoops to cross and so many layers to jump over to achieve that, you end up increasing the cost of that actual transaction and that actual flow. And sometimes, guys, it's just really not needed. Sometimes it's just get back to basics and keep it simple.
But if you look at the cost, and it's a fair point, I'm not disagreeing. If we look at the cost, then it's and we've done the study, but it's from a Swift perspective, so we don't go down to the retail point of view. So probably at the retail level, you get that broader. But at a certain point, even that retail comes back higher up in the equation, and there we don't need 20 different ways of talking to each other. We don't.
Yeah, agree.
We don't. So I agree with you in the retail layer, 100%. But as we move up the value chain, we shouldn't make it that complex.
Agree.
Yep.
And then maybe as a last point, you said it, the rail is not the issue. And actually we did that study. The rail is not the issue. It's the last mile where if you look at speed of payment, 80% of the time of the speed of a payment is spent on the last mile. We need to solve for that because that's where the cost is. And it's not the fault of the banks. There's different reasons for that. But we really need to look at that. Sorry, I'm looking at time.
Sure. Okay, so to some of the questions, and it was interesting, there's two points made. One speaks about thanks for bringing the customer into the conversation. And then another one says, no, actually, it's all been focused on the customer, and we should be doing more commercial and corporate discussion. So I think we've got it right. Clearly, we're on balance there. One of the things that was mentioned here, and I just want to find it, it's around data. And the question really goes around challenging fintech around being regulatory compliant and taking cognizance of the risks and the ever-prevalent risks of things, obviously managing it through regulation, but also the risks of fraud and scams and things. And are you taking the same level of focus and attention on that? Are you putting that on there? And how do you give the customer, because trust is so important in their lives, give the customer that trust that they are going to get the result they want and not pay someone else they thought they were actually not paying?
Yeah, I think the onus is on, the fintech industry and the pivot into non-traditional payments or doing things that are faster, more seamless, more cost-effective, commercially viable, etc., at a pan-regional level. And I think that there has to be a serious focus on fraud, KYC, understanding how to onboard your customers seamlessly and operating within a framework, right, that governs and protects customers and businesses. I mean, I'll say this quite boldly. Authority and rules are biblical, supported by God. So there is a place and there is value in that. And I think that the notion that we don't want to comply or that we're trying to cut, corners is out of frustration for the fact that is that built for what we do? And when is the next kind of maybe call it generation, coming into the fold to say, hey, why don't we look at things with a different perspective? Is there knowledge transfer of the mega information and knowledge that is held within the payments industry today across multiple markets being transferred into the next level and next generation of entrepreneurs and fintech founders that are now responsible for ensuring that they are compliant, they are working within the frameworks, and they're also innovating and collaborating together to build new types of frameworks and risk metrics and fraud controls, etc., that make sure that we are protecting the business that we're operating in the market. I think there's a lot of work that needs to be done, but I agree that the responsibility is on us to ensure that we are protecting and building trust with our customers.
That thing's going to buzz at me. One last question to each one of you. Same question, and then we're going to call it quits and go to tea. What do you want to see happen, and it's a question from the audience, in the next, I would say from tomorrow, but in the next 2 years?
Yeah, so I think we need to get a lot more practical. I think we're talking in the ethereal space way too long, and every conversation here has been about that. So myself is really getting practical, putting something that's on the table that can be done, doable stuff, as opposed to talking about what we're not doing.
Thank you. Olivia?
For me, it's not creating a new payment system. my thing and what I believe is that the payment system comes after a regulatory harmonization, which we need. When we've got regulatory harmonization, it should not be across Africa, because Africa is massive. It can be regional. Then we can have payment systems that are going to operate it, so we get free movement of people and goods. And I think if we talk about regional payment system, we do need that harmonization and regulatory framework, and then followed by standardization.
Miranda.
I just want to create impact. It's impact. I mean, at the end of the day, yes, we're building for generating revenue, for free movement of good and service and money and cross-border payments and all this fancy stuff. But I mean, Africa is a people continent.
Yep.
And I feel like we need to learn how to put people first. And that includes the people that are sitting in the room that are running businesses and executives, etc. And I think for me, that is the most important. The rest follows.
Okay, I thoroughly enjoyed it. I hope you did as an audience. And I can see the passion. You can feel the passion. We're all in wanting to swim in the same direction, right? We want this thing to work. We recognize that we're not necessarily competitors in every shape or form, and we should be working together. We have the ingredients. We just need to get the right recipe to bring it into something nice and juicy. All right, thanks very much, everyone, and thanks to my panel.
Thank you.
Thank you.